Hello and welcome everyone to Oil Asset of the Day for the 21st of January 2020, presented by myself, Phil Carr at the Gold and Silver Club. Now again, for those of you that watched last week's daily Asset of the Day report on oil, and also you watched our week ahead report, you will know last week we were buying in between that 57 to 58 US dollar per barrel level. That is what we identified to you as a buy opportunity. Now, it was great to see on the open, significant gap higher, where we've essentially made sure we've banked profits right off the open. 255 points over 2 trades. This is very important when you have a spike in geopolitical news, especially from a gap on the open like this. It's very common to see the gap get filled. The gap was filled in just 24 hours, providing us with a great opportunity not only to bank at the highs, but also buy back in again on this revisit back towards 58 US dollars per barrel. Ultimately, over the course of this week, we are expecting range-bound trade, again, really capitalizing on these pullbacks, being patient and just understanding the market dynamics, how they often respond to geopolitical news. We had news over the weekend that we had disruptions in Libya. That, of course, caused that spike in the open for oil. You don't want to FOMO in after a spike like that. You want to take advantage of profit taking, which often occurs. The same that we saw on gold when gold broke out to 1,610 US dollars per ounce on geopolitical news. You want to use these breakouts from geopolitical news as opportunities to bank profits in the markets, not to FOMO in and get in the highs, but to bank profits. And of course, at the moment on oil, we are expecting more range-bound trade due to the Martin Luther King holidays that we had earlier on in the week on Monday. We are therefore going to see oil inventories data later on in the week on Thursday. We have seen a pullback this morning back below 58 US dollars per barrel. I'd watch out for a potential tap of $57 to $57.50 per barrel. I'm looking at these levels to add, again, additional trades after we've banked profits right off the Sunday open. We're building further positions at lower prices here again, with a view that over the course of this week and into next week, we're going to get a revisit back towards 59 and 60 US dollars per barrel. Also, of course, look out later on for the oil rig count, the API data as well, all of these important catalysts for oil prices. I would also pay attention to Thursday's European Central Bank announcement. Generally speaking, that does have big impacts across the whole financial markets. It can have a significant impact on the dollar. And as you know, oil priced in US dollars, if we were to see a significant pullback, for example, on the dollar index, that would be a further supportive catalyst for oil prices. But if we saw a dollar breakout, that can put a bit of pressure on commodities and also oil as well. It's just worth noting that correlation in the market, or the inverse correlation that we have with the US dollar and oil prices too. So really the trading plan over this week is we have managed to capitalize immediately off the open for 255 points on oil. We've now waited patiently for the pullback. We bought back in, back towards that 58 US dollar per barrel level. I'm looking at the potential to revisit back towards 57 to $57.50 per barrel. If we do hit those levels, I would look at that as a buy opportunity to take the price back towards $60 per barrel between now and the end of this month. So with that, that's been Oil Asset of the Day. And of course, I wish you good trading.